I've been watching people my entire life, studying them, not just their portfolios, their behavior, their decisions, their patterns. For 70 years, I've sat across the table from thousands of people, smart people, educated people, people with degrees from Harvard and Wharton, people who could explain complex derivatives in, quote, economic theory. And most of them will never be rich. Not because they can't be, not because the system is rigged against them, not because they weren't born into the right family or didn't get the right opportunities. They will never be rich because they won't let themselves be rich. This isn't about intelligence. I've seen PhDs go bankrupt. I've seen high school dropouts build empires worth hundreds of millions. I've seen lottery winners lose everything within 5 years and watched janitors quietly accumulate fortunes that shocked their families when they died. The difference between those who build wealth and those who don't isn't in the brain. It's not about IQ points or SAT scores or which school you attended. The difference is in the wiring underneath, the psychology, the habits, the daily decisions that seem small but compound into destinies. Charlie always said if you want to succeed, first study failure. Invert, always invert. So today I'm not going to tell you how to get rich. I'm going to tell you why most people stay poor. And I warn you, you won't like hearing this, because somewhere in these patterns, you'll see yourself. We all do. The question is what you do after you see it. The first wealth killer is comfort, not poverty, not lack of opportunity, comfort. Human beings are not designed to delay gratification. Your brain evolved over millions of years to prioritize immediate rewards. When your ancestor saw a fruit tree, he didn't think about saving some for next month. He ate as much as he could because tomorrow wasn't guaranteed. That wiring made sense in the savannah. It kept our species alive. But today, in a world of abundance and compound interest, that same wiring is a death sentence for wealth. Your brain wants pleasure now, safety now, comfort now. Every fiber of your neurology is screaming at you to spend the money, buy the thing, feel good today. And most people obey. I've watched this pattern for decades. A young person gets their first real job, good salary, more money than they've ever seen, and within 6 months, their lifestyle has expanded to consume every dollar. Nicer apartment, better car, dinners out, subscriptions, gadgets, clothes, a lifestyle that looks like success but is actually a prison. They think they're enjoying their money. They're actually enslaving themselves to a treadmill they'll run on for the next 40 years. Every single time, they pick today over tomorrow. Every single time, they choose comfort over freedom. There was a famous study at Stanford, the marshmallow experiment. Researchers put a marshmallow in front of children and said you can eat this now, or wait 15 minutes and get 2 marshmallows. Some kids waited, most didn't. Then they tracked those kids for decades. The ones who waited? They had higher SAT scores, better health, lower rates of addiction, higher incomes. 1 marshmallow or 2, 1 moment of patience in childhood predicted success across an entire lifetime. But here's what's terrifying. Adults are even worse than children. Researchers offered adults $100 today or $150 in 1 year. A guaranteed 50% return. No risk, just wait 12 months. Most took the 100 now. Think about that. Sophisticated adults, many with college degrees, couldn't wait 1 year for a 50% guaranteed return. The stock market's historical average is 10%, and people chase it desperately. Here's 50% guaranteed, and they say, no thanks, I want the money now. That's not stupidity, that's biology. They say, no thanks. That's millions of years of evolution screaming, take it now, tomorrow you might be dead. But here's what separates the wealthy from everyone else. Biology is not destiny. You can override the wiring. You can train yourself to delay. You can build systems that protect you from your own impulses. Most people just choose not to. They say, I deserve this. 4 of the most expensive words in the English language. I work hard, so I deserve this vacation. I've had a tough week, so I deserve this purchase. I'm a good person, so I deserve this lifestyle. Deserve has nothing to do with wealth. The universe doesn't care what you deserve. Compound interest doesn't care what you deserve. Your future self doesn't care what you think you deserve today. They say life is short, and yes, life is short, but it's also potentially long. What if you live to 90? What if you have 30 years of retirement? What if life is short and you spend those short years worried about money? They say, I'll start investing next year. Next year comes. They say it again and again and again. A decade passes. They've said next year 10 times and invested nothing. Next year never comes. Comfort always wins. And comfort, compounded over decades, equals poverty. I've lived in the same house since 1958. I paid $31,500 for it. People ask me why I don't upgrade. I'm worth over $100 billion. I could buy any house on earth. But why would I? My house is comfortable. It's where I raised my children. It has everything I need. A bigger house wouldn't make me happier. It would just be more rooms to not use and more money not compounding. I drive my cars for years. I eat the same breakfast every day. My lifestyle today isn't dramatically different from my lifestyle in 1970. Not because I'm cheap, because I learned something early that most people never learn. The relationship between spending and happiness breaks down quickly. Going from poverty to middle class dramatically increases happiness. Going from middle class to rich, the happiness gains are minimal. Going from rich to super rich, almost nothing. But the cost keeps climbing. And every dollar you spend on marginal happiness is a dollar not building your freedom. The rich learn to be uncomfortable. They live below their means not because they have to, but because they understand the trade-off. They delay gratification not once, but thousands of times. They let the money work instead of spending it. It's not complicated, it's just hard. And most people will always choose easy over hard. That's the first reason they'll never be rich. Here's the second wealth killer. And this one is more insidious than the first. People care more about looking rich than being rich. There's a fundamental confusion in our society between wealth and income, between rich and high earning. They're not the same thing at all. Income is how much money flows through your hands. Wealth is how much stays. I've met doctors earning $500,000 a year with a negative net worth. I've met teachers earning $50,000 a year with $1 million portfolio. The doctor looks rich. The teacher is rich. But nobody sees the teacher's brokerage account. Everyone sees the doctor's car. And that visibility is the trap. Humans are social creatures. We evolved in tribes where status meant survival. The high-status members got more food, better mates, more protection. Our brains are wired to seek status like they're wired to seek sugar and sex. But in the modern world, we've confused the signals. Status used to mean respect earned through contribution to the tribe. Now it means stuff. Visible, expensive, impressive stuff. So people buy the stuff, not because they need it, not even because they really want it, because they want others to see it. They want the status that stuff supposedly signals. I still live in the same house I bought in 1958. It's a nice house, but it's not a mansion. There's no gate, no guard, just a regular house on a regular street in Omaha. People think that's charming or eccentric. Some billionaire quirk? It's not, it's math. Every dollar I spend on a bigger house is a dollar not compounding. And at my historical returns, that dollar would become $20 or $30 or $50 over time. The mansion doesn't just cost its purchase price, it costs its opportunity cost multiplied by decades. But beyond the math, there's something else. I don't care what strangers think of my house. I know who I am. I know what I've built. I don't need a mansion to validate it. I don't need anyone's approval. I certainly don't need to trade my wealth for their momentary impression of me. But most people do. They care desperately. They're addicted to the opinions of others, most of whom they'll never meet and none of whom will pay their bills. They buy cars they can't afford to park in driveways, of houses they can't afford to impress neighbors they don't even like. That's not an exaggeration. That's a literal description of how most Americans live. The German car in the driveway isn't an asset, it's a statement. It says, please think I'm successful. And that statement costs $50,000. Financed, with interest, depreciating every single day. Meanwhile, the actual millionaires, the research shows they drive Toyotas and Fords. They wear clothes from regular stores. They live in modest neighborhoods. They don't look rich because they don't care about looking rich. They care about being rich. Do you know what $50,000 becomes in 30 years at 10% annual returns? $873,000. That's the real price of the car, not 50,000. Almost a million. You're trading almost $1 million of future wealth for a car that will be worthless in 10 years. Not for transportation. You can get transportation for a fraction of that price. For status. For the imagined opinions of other people. Is that trade worth it? For most people, apparently it is. That's why they'll never be rich. I've met thousands of people over my career. Thousands. I've been to their homes. I've seen their lifestyles. I've reviewed their financial statements. And I've learned to never judge wealth by appearance. Some of the wealthiest people I know look completely ordinary. Old clothes, old cars, small houses. You'd pass them on the street and think nothing of it. Then you'd see their brokerage accounts and your jaw would drop. Some of the most broke people I know look spectacular. Designer everything, impressive addresses, luxury vehicles. You'd see them and think, now that's success. Then you'd see their balance sheet. Negative. They own nothing. The bank owns everything. Which one are you trying to be? The one who looks rich, or the one who is rich? You can't be both. Not at the beginning. Not until your wealth is so substantial that the spending doesn't matter. For the first decade or two, you have to choose. Most people choose appearances, and that's why they stay poor. The third wealth killer is what you feed your mind. I read 500 pages a day. I've done this for 70 years. Annual reports, business histories, biographies of great industrialists, economic theory, psychology research, dense, boring, useful material. When people visit my office, they're always surprised. No fancy computers, no Bloomberg terminals, no CNBC on the television, just stacks of reading material, reports and documents everywhere. I spend 80% of my working day reading. Just reading and thinking. That's the job. That's how decisions get made. By filling your mind with relevant information and letting it synthesize. Most people don't read. Or if they read, they read things designed to entertain rather than inform. Most people scroll. 500 posts a day, 1,000. Outrage and drama and entertainment. Quick hits of dopamine designed by algorithms to keep them scrolling. Dense, addictive, useless material. And then they wonder why they can't think clearly. Your mind is an asset, the most important one you have. More important than any stock or piece of real estate. Because your mind makes all the decisions. Your mind evaluates opportunities. Your mind controls your behavior. And you're feeding it garbage. Imagine if you fed your body the way you feed your mind. Imagine eating nothing but sugar and processed junk every day for years. You'd be sick. You'd be obese. You'd have no energy. That's what most people do to their minds. Mental junk food all day, every day. And then they're surprised that their thinking is foggy, that they can't focus, that they make bad decisions with money. Charlie Munger always said the best thing you can do is go to bed smarter than you woke up. Every single day, compound knowledge like compound interest. If you learn a little bit every day, if you read and study and think, after a year you're dramatically smarter. After a decade you're transformed. After a lifetime you have wisdom that no school can teach. But that requires intention. You have to choose what enters your mind. You have to protect it like you protect your investment portfolio. You have to be selective. Most people aren't selective at all. They let anyone and anything into their heads. They consume news designed to make them angry because angry people click more. They watch content designed to make them scroll because scrolling is addictive. They absorb opinions from people who've built nothing and achieved nothing and know nothing. Then they wonder why they can't think clearly about money, why they panic when markets drop, why they chase fads and buy high and sell low. Garbage in, garbage out. It's true for computers. It's true for investment decisions. It's true for life. I don't watch financial news, ever. I don't check stock prices every day. I don't follow market commentary. I don't let the talking heads into my thinking. Because I know something important. The news is not designed to inform you. It's designed to capture your attention. Those are different goals. And attention is captured through drama and fear and controversy. If it bleeds, it leads. If it's calm and rational and long-term focused, it gets no clicks. So the incentives push everything toward panic and excitement and short-term thinking, the exact opposite of what builds wealth. The money follows the mind. Fix what you feed your mind, and the money follows. Poison your mind with garbage, and no amount of income will save you. I've seen smart people destroy themselves with bad information diets. Brilliant people who got caught up in market hysteria because they watched too much news. Talented people who chase trends because that's what their social media fed them. And I've seen simple people build fortunes because they ignored the noise. They read books instead of feeds. They thought in decades instead of days. They protected their minds from the pollution. Which one are you? The fourth wealth killer is blame. Listen to how most people talk about money. Really listen next time you're around people discussing their financial lives. The economy is rigged. The rich get richer while the rest of us suffer. My boss doesn't pay me what I'm worth. My parents never taught me about money. The government takes too much. I can't get ahead because of insert external factor. Always someone else. Always some external force. Always a reason why it's not their fault. There's an endless supply of external factors to blame. The economy, the politicians, the corporations, the boomers, the millennials, the system, the man. And here's what makes this so seductive. Every single one of those reasons might be partially true. The economy is unfair. Some people are born with massive advantages. Some bosses are genuinely terrible. Some parents do fail to teach basic financial skills. The system does have biases and problems. I'm not naive. I know I was lucky. Born in America instead of Bangladesh. Born in 1930 and not 1330. Born with a brain suited for capital allocation. Born to parents who understood business and encouraged my interests. These advantages were not earned. They were given, and I'm grateful for them. But here's what I've learned after 93 years on this planet. Acknowledging that life is unfair is very different from using that unfairness as an excuse. The moment you decide that your financial situation is someone else's fault, you give away your power. You become passive. You become a victim. And victims don't build wealth. Ever. This isn't about morality or fairness. It's about psychology and behavior. When you blame external factors, you're telling your brain there's nothing you can do. The situation is out of your control. So why try? Why sacrifice? Why do the hard work of building wealth when the system is just going to take it away? That mindset is poison. It feels good. There's a relief in not being responsible. But it guarantees failure. Wealthy people think differently. They take responsibility for outcomes even when, especially when, the situation isn't fair. They say, okay, the economy is tough. What can I do anyway? They say, yes, my boss undervalues me. How do I either change that or find a new situation? They say, my parents taught me nothing about money. How do I teach myself? They find edges. They adapt. They act. I've met people who grew up in unimaginable poverty. Immigrant families with nothing, single parents working 3 jobs, childhoods of genuine hardship and deprivation. Some of those people built empires. They took their circumstances and used them as fuel. They refused to be victims. And I've met people who grew up with every advantage. Good families, good schools, trust funds, connections. Everything handed to them. Some of those people accomplished nothing. They coasted on their advantages and never built anything of their own. Or worse, they squandered what they were given. The external circumstances don't determine the outcome. The response to those circumstances does. I'm not saying external factors don't matter. They do. But they're not the primary cause of most people's financial situations. The primary cause is internal. The billionaires I know, the ones who actually built their wealth, not inherited it, they all share one trait: extreme ownership. They take responsibility for everything in their lives, not because it's fair, but because it's effective. They don't wait for the economy to improve. They don't wait for the right politician. They don't wait for anything. They act with what they have, where they are. Until you do the same, you'll always have an excuse. And excuses, unfortunately, don't compound. The fifth wealth killer is impatience. This is perhaps the most destructive one in today's world, because everything around you is pushing towards speed, instant delivery, instant communication, instant gratification. Everyone wants to be rich by next year. They want the shortcut, the hack, the secret strategy that the wealthy are hiding. They look at my net worth and think there must be a trick I'm not sharing. There's no trick. There's time. I bought my first stock at 11 years old. 11. I'm now 93. That's 82 years of investing, more than 8 decades of compound interest. 99% of my wealth came after my 50th birthday. Let me say that again because it's the most important thing I'll tell you today. 99% of my wealth came after I turned 50. At 50, I was rich by any normal standard. But compared to my current wealth, it was nothing. The real explosion came in the last 40 years, because that's how compounding works. The gains get larger and larger over time. The curve is exponential. But nobody wants to hear that. It's not exciting. It doesn't sell books or courses or newsletters. People want the fast version. They want to skip the decades of patience and discipline. They want the destination without the journey. So they chase crypto, meme stocks, options, NFTs, whatever's hot this month, things that promise astronomical returns in record time. And some of them get lucky. Some of them buy the right lottery ticket at the right time and make a fortune overnight. But watch what happens next. Studies show that most lottery winners are broke within 5 years. Most people who get rich quick lose it just as quick. Why? Because they never learned the discipline. They never developed the psychology. They learned to gamble, not to invest. They learned to chase excitement, not to build value. Easy money creates weak investors. Hard-earned money creates strong ones. The people who build sustainable wealth are the people who learn patience first, who make mistakes with small amounts and learn from them, who develop discipline over years and decades. I made my first investment at 11. By the time I was serious about building wealth, I'd already spent years learning, making errors, understanding my own psychology, building the mental models that would serve me for life. That's why I could hold through market crashes without panicking. Why I could buy when others were selling. Why I could wait years for my thesis to play out. The patience was built over decades of practice. But today, people want to skip that part. They want to jump straight to the returns without the preparation. And it doesn't work. Wealth is built slowly, then suddenly. The first 20 years feel slow, agonizingly slow. You're investing and sacrificing, and your net worth barely seems to move. The numbers look pathetic compared to your effort. Then something shifts. The compounding curve starts to steepen. The gains get larger. Money starts making money at a pace that shocks you. But you only get the suddenly if you survive the slowly. Most people quit during the slow part. They get bored. They get impatient. They see someone else apparently getting rich faster, and they abandon their plan to chase the new shiny thing. I've been doing the same thing for 7 decades, literally the same strategy. Find wonderful businesses at fair prices, buy them, hold them forever. That's it. The same principles, the same patience, the same boring discipline, repeated thousands of times. That's the whole secret. That's everything I know about building wealth. Keep doing the right thing long enough for compounding to work. It takes 20 years to build a substantial portfolio, 30 to build real wealth, 50 to build a fortune. That's not a bug in the system. That's the system working correctly. But it's too boring for most people, too slow, too unsexy. They'd rather chase excitement and die broke than embrace boredom and die rich. That's why they'll never be wealthy. Not because they don't know what works, because they won't do it long enough. There's a 6th pattern I should mention, because I see it everywhere. People believe that building wealth must be complicated, that the secrets are hidden in complex strategies and sophisticated instruments and advanced techniques. They spend hours learning about options and futures and currency trading. They subscribe to newsletters with proprietary systems. They attend seminars promising advanced strategies, and they would have been better off buying an index fund and going to the beach. The most successful investing strategy in history is also the simplest. Buy good assets, hold them forever, let compound interest do its work. That's it. That's the strategy that has created more millionaires than any other. No complexity required, no advanced degree, no special access, but simple doesn't sell. Nobody gets rich selling a book that says, buy index funds and wait. Nobody builds a media empire on be patient. So the industry creates complexity. Complexity justifies fees. Complexity justifies newsletters and courses and seminars. Complexity makes people feel like they're doing something sophisticated. And all that complexity usually loses to simple approaches. I've seen people spend more time researching their stock picks than they spend actually earning money to invest. They analyze and strategize and optimize, and at the end of the year, they've underperformed someone who just bought an S&P 500 index fund and forgot about it. The time spent on complexity is often better spent earning more money, or enjoying your life, or doing almost anything else. Simple works, but simple is hard to accept because it feels too easy. It feels like you're missing something. It feels like the wealthy must have secrets you don't know. We don't, at least not the secrets you imagine. The real secrets are boring. Spend less than you earn, invest the difference, be patient, don't panic. Do this for decades. That's it. That's the secret. Anyone can do it. Almost no one will. The seventh pattern is fear. Most people are terrified of losing money. So terrified that they never really try to make any. They keep their savings in bank accounts earning nothing. They avoid the stock market because it seems risky. They talk themselves out of opportunities because, what if it doesn't work? And yes, you can lose money investing. I've lost money. Every investor has. It's part of the game. But here's what most people don't understand. The biggest risk isn't losing money. It's not making any. Inflation is running at 3, 4, 5% a year, sometimes more. If your money isn't growing faster than that, you're losing purchasing power every single day. The safe bank account earning 0.5% is losing 2, 3, 4% a year to inflation. That's not safety. That's a slow, guaranteed loss. But it feels safe because the number in your account stays the same. The purchasing power disappears invisibly. Meanwhile, the stock market returns 10% on average over long periods. Yes, it goes up and down. Yes, there are crashes. Yes, you might lose 30% in a bad year. But over 20, 30, 40 years, the UPS overwhelmed the downs. The compound growth dwarfs the temporary losses. The person who stays safe in bank accounts will have dramatically less wealth than the person who embraced the volatility. Not might have less, will have less. It's mathematical certainty over long periods. Fear of failure leads to guaranteed failure of a different kind. The slow, invisible failure of purchasing power disappearing. The wealthy understand this. They accept short-term volatility as the price of long-term growth. They stay invested through crashes because they know the recovery will come. They don't let fear drive their decisions. Most people can't do this. They panic at the first sign of trouble. They sell at the bottom and buy at the top, over and over, because their emotions control their behavior. The ability to be afraid and act anyway is one of the most valuable financial skills you can develop. It's not about eliminating fear. That's impossible. It's about not letting fear determine your actions. But most people never develop this skill. They stay paralyzed on the sidelines while the courageous build wealth. I've talked for a while now. Let me summarize what I've said. Most people will never be rich because they're addicted to comfort and can't delay gratification. Every dollar that could compound gets spent on temporary pleasures. They care more about looking wealthy than being wealthy. They trade real money for the imagined opinions of strangers. They poison their minds with garbage information. News designed to scare them. Content designed to distract them. Opinions from people who've built nothing. They blame external factors for their situation. They give away their power by playing victim. They wait for rescue that will never come. They're impatient. They want fast results and won't accept the decades required for real wealth. They think it has to be complicated. They chase complexity when simplicity works better. They're controlled by fear. They avoid all risk and guarantee the slow loss of purchasing power. 7 patterns, 7 reasons, 7 explanations for why most people will retire with almost nothing despite decades of work. I haven't told you anything complicated today. No formulas, no secret strategies, no sophisticated techniques. Delay gratification. Ignore what others think. Protect your mind. Take responsibility. Be patient. Keep it simple. Master your fear. 7 things. Simple to understand. Almost impossible to do consistently over decades. That's why most people will never be rich. Not because they don't know what to do, because they won't do what they know. The gap between knowing and doing, that gap is where wealth lives. And most people will never cross it. Crossing it doesn't require genius. It doesn't require special access. It doesn't require luck, though luck helps. It requires decision. Real decision, not wishes or hopes. The decision to be different from the majority. The decision to do hard things when easy things are available. The decision to think in decades when everyone around you thinks in days. Most people will read this or hear this and nod along. Yes, this makes sense. I should do this. I'll start tomorrow. And tomorrow will come and they'll do exactly what they did today. Because change is hard. Because habits are powerful. Because the pull of comfort and status and speed is almost irresistible. The question isn't whether you understand this. You do. The concepts aren't complex. The question is whether you'll act on it. Tomorrow and the day after. And the day after that. For the next 20 or 30 or 40 years. Will you be different? Will you actually change? Or will you be like the majority, nodding along, understanding everything, changing nothing? I'm 93 years old. I've watched this pattern my entire life, and I'm betting most of you won't change. Prove me wrong, and please hype this video.